All right, today we're pulling back the curtain on one of the biggest names in the chip world, Texas Instruments. We're going to dig into their latest earnings report and find out the real story the numbers are telling us. Have you ever actually wondered what a multi-billion-dollar company's report card looks like? Because that's really what an earnings report is. It's a snapshot of their health. So let's see what kind of grades TI earned this quarter. First up, the big one, revenue. For the third quarter, TI brought in a cool $4.74 billion. This is what we call the top line. It's basically the total amount of money they made selling stuff before any expenses get taken out. But making a lot of money is only half the story, right? The real question is, how much did they keep? And that brings us to net income, the profit. After paying all the bills, TI was left with a very impressive $1.36 billion. That's the bottom line, and yeah, it's looking pretty healthy. Now, for all of you investors watching, this is the number that you're probably paying the most attention to, earnings per share, or EPS. It came in at $1.48. You can think of this as the company's profit just chopped up and divided among all of its stock shares. It's a super important yardstick for profitability. So these numbers are big, sure, but they tell an even better story when you zoom out a little. Their revenue grew a really solid 14% compared to this exact same time last year. It jumped from about $4.15 billion to that $4.74 billion we just saw. I mean, that is the kind of strong, steady growth that gets people excited. And it looks like this wasn't just some lucky break in one specific area. TI CEO Haviv Ilan actually pointed out that this growth was happening across all end markets. Now, this is a really, really important detail. It means the whole company is firing on all cylinders, not just leaning on one hit product. Okay, so if they're growing everywhere, let's peel back the layers a little bit. Where is all this money actually coming from? Let's take a look inside their different business segments. Whoa, okay, so this breakdown is pretty fascinating. Just look at the analog segment. It's an absolute powerhouse. It brought in over $3.7 billion and grew at a whopping 16%. Embedded processing is doing great too, up 9%. The big takeaway here? While the whole company is doing well, the analog chip business is, without a doubt, the engine driving this whole train. So look, revenue and profit are great. But if you really want to know how a company is doing, you follow the cash. And that's where something called free cash flow comes in. It's maybe one of the most honest measures of a company's real financial strength. Before we see the number, let's just quickly break down what free cash flow even is. Put simply, it's the cash a company has left over after it pays for everything it needs to run and to grow. Think of it like the company's disposable income, the money it can use to pay back shareholders, clear debts, or just save for a rainy day. So how much of this disposable income did TI actually generate? Well, get this. Over the last 12 months, they've cranked out an incredible $2.4 billion in free cash flow. That is just a massive pile of cash. And this is where the story gets really wild. A year ago, their free cash flow was around $1.47 billion. Today, it's at $2.42 billion. That is a 65% surge in 1 year. This isn't just a little bit of growth. It's a huge leap in their ability to turn their business operations into cold, hard cash. So what do you do when you have a cash-generating machine like this? Well, in TI's case, the answer is pretty simple. You share the wealth with the folks who own the company, the shareholders. And they are not shy about it. Over the past year, TI has returned a staggering $6.6 billion to its shareholders. Just to put that into perspective for you, that is more than the entire annual revenue of a lot of other well-known companies. So how did that $6.6 billion break down? Well, you can see here the lion's share, almost $5 billion, was paid out in dividends. Those are just direct cash payments to people who own the stock. The other $1.6 billion was used to buy back their own stock from the market, which tends to make the remaining shares more valuable. But hold on, because this might be the most jaw-dropping number in the whole report. While their dividend payments grew by a nice but modest 4%, look at the stock buybacks. They exploded by 253% compared to last year. This signals a major shift in strategy. It tells us TI is getting way more aggressive about using its cash to buy its own stock, which is a huge vote of confidence in its own future. So, that's the story of the last few months. It's been pretty impressive. But what about the road ahead? Let's wrap things up by looking at what TI is predicting for the end of the year. Here are the official numbers straight from the company. They're expecting revenues somewhere between $4.22 and $4.58 billion, with earnings per share between $1.13 and $1.39. Now, that is a little bit of a step down from this quarter, but that kind of dip can be totally normal for the season, and it still points to a very, very strong finish to the year. Of course, no forecast is ever a guarantee. You got to be realistic about the challenges. And TI themselves point to a few risks on the horizon, like, the demand for chips going up and down, incredibly fierce competition, potential supply chain headaches, and of course, the ever-present threat of cyber attacks. And that really brings us to the big central question for TI's future. We know they are an absolute cash-generating powerhouse, and we also know they are pouring billions into building new factories. So the question is, will this incredibly powerful financial engine be enough to fuel the next wave of technology and lock in their spot as an industry leader for years to come? That is the multi-billion-dollar question, and honestly, only time is going to tell.